Alrighty, everyone. So welcome. So nothing to just a disclaimer. Nothing we say over here is financial advice. It is all education. What I know a little bit, and always do your due diligence when you are doing anything or taking a trade. Um, but yeah, with that said, go for it. If you have any questions, this is the class for it. If you guys want me to review something, go for it now. Something? Nothing? Everybody's awesome. Did everybody have a great trading day today? So I'll just go over one thing. This is for tomorrow, more for tomorrow than today. TVGN, TVGN. So this was, they got like a big funding, I think. Like they had some news with funding as well. Where is it? Yeah, it reaffirms revenue forecast. This is it. So they said that, they will have top line revenue is great for drugs, projects 1 billion in revenue this year, and then 5 years is going to be 10 billion and 14 billion, blah blah blah. So good news, like most companies are saying that their revenue forecast is not, they're not giving it or they're giving multiple scenarios. This is giving like really great, um, really great outlook, which is awesome. So of course, because of that, the chart is skyrocketed. I have some. I bought some when it was going up, and I got a fill over here. I think at 1.17. I think I posted one of the chats as well. I didn't post it on my tab itself because it just went so fast that there's no way to post this. It had already done most of its gains. But this is one thing that I would watch for tomorrow morning, and by tomorrow morning I mean early morning. Um, if this can break the 133 and then 148, then we have a decent amount of space to go up. Um, sure, Jamin, we'll get there. I'll tell you. We'll go over it, or we'll go over SPY. So this is one setup that I'm looking at for tomorrow morning, but tomorrow morning means 4 o'clock in the morning. So if you guys are up for it, up for the challenge, this might do a nice spike from wherever this closes to, at least I think this level. So if it's 130 to 148, that's an easy 10%. It could go more, but that's what I'm looking for. My entry price is lower, so I'm a little bit more comfortable that way. But I do feel this has much more potential. Like even after over the next coming few days, I think this can go up. So if it holds up really nicely, I think it can go up more. But at least even if not that, most penny stocks do fade out a little bit at least. At least in the morning, this should do a decent leg up before it fades. But overall, this company overall, TVGN, has been a nice one that has paid multiple times. So once it comes down to its baseline, it would be not be a bad thing that I would maybe I would start accumulating at it, and then I will definitely add it on my channel when I'm doing so. But if you look at it, it always gets these good spikes, big spikes, really nice pushes. So you just have to wait a little bit sometimes. That's all. The second one that I want to go over is Resolve, actually, which gets a bad name because it is heavily promoted as well. But if you look at Resolve's chart right now, sorry, look at the daily chart right now, it looks really nice actually. So if you look at three things, one, so we bottomed out. This is not a double bottom to be really honest, but it bottomed out really nicely around the same point. You can see the volume over the last 3 days is significantly higher than any of these days, and we have been just forming like these green candles, one, two, three, four, five, six, seven, eight. Out of this, one is a red. I mean, if you really ignore this, you have now five green candles with the last three having massive volume. I do think this can do a nice break up. So I would watch it for tomorrow. It's been moving 5, 10% almost every day. So I would just keep a close eye on this. Um, and yeah, go from there. I would really look forward. I'm really looking forward to this breaking the 2.4 level. 2.34 is over here, but yeah, 2.4, and then then we can really start making a move up. So the volume combined with just nice structure overall going up. This is really nice. So these are two things that I really like. You guys can take a look at it at least in the meantime, and then follow it. Even if you don't want to take the trade, don't take the trade. Just follow it out. See how it goes. Resolve is a pretty big company. Comparatively, it is 485 million, so $500 million company, so it's not small. And therefore, it won't move like 50% or 100% in a day. That one's not going to happen at all for a company this big. But I think TVGN is relatively really small, and that can do some like really good moves in a really small amount of time. Let me just check what TVGN short interest is. I just forgot to check that. TVGN short interest is, oh, it's in the low 30s right now. Okay, so might not be like a big mover in the next few days, but it seems to be moving nicely for now. So yeah, keep an eye on it. And then yeah, moving on. J-Man. SPY is done dropping and is breaking for upturn and can hold contracts for possibly. Ooh, okay. SPY. Let's check SPY. It doesn't look messy at all. So, how do you know that SPY is done dropping? That's a great question. I think that's the question that everybody looks for. You can't time this part of the bottom, man. That is just. I mean, I haven't found anybody who can consistently, persistently, accurately do this, time this bottom multiple times, because it can stop over here, it can stop over here, it can stop over here, right? Like there are multiple places where it can stop. What you can do is when it starts to break trend, right? You might miss this, like when it starts to break the 9 EMA and the 20 EMA, yeah, you might miss this part from 545 to 546 or 547 maybe, but once you see this on the 5-minute chart, you see that it's bottomed out. You see three big candles, stacking candles, 1, 2, 3, 4, like, fourth candle over here. You can do a good entry over here and then just follow the trend. The problem with it is, once you start going from here, these things scare you, or at least scare me. Let me put it this way. When it goes up really nicely, you could have gone from here to here, from 546.82 to 548, almost like $2 move almost, and this rapid increase would have given you some really nice price gain. Now when this happens, you're going to lose a little bit of money, like, or you're going to look at your P&L, and if you were like $200 up and now you're going to be $100 up, this is what scares everybody. The key is to have the courage in your setup to hold it all the way up till it breaks trend, and it broke trend over here. So yeah, if you went all the way from here, for example, like when it broke above the 9 and the 20 EMA, it went from here and then maintained the 9 EMA, maintained the 9 EMA all the way to here. You will see, for example, if you were started from 100, you went to 200, 300, 400, 500. Now at 500, you will see a pullback, and you're going to come down to probably 350 or 400, something of that sort, right? That's the part that you have to be willing to lose to get to that 400% or like 100, 200, 300% gain that you're looking at, right? And the reason for that is, you don't know where this is going to top out. And this is where it topped out. And how do you know that it topped out? Is that it broke down below the 9 EMA consistently. 1, 2, 3, 4. You could have taken, you can start taking profit somewhere over here. Or you can take profit at, 100, 200, 300, 400 and let your last runner run, and once it breaks trend, once it actually breaks trend, that is when you close your position out. So that's the only way that I have that's the only way that I have consistently been able to replicate it. Let me put it this way: is I trade based on EMAs, and when I get a confirmation on a bigger time frame, especially on a 5-minute, not really on a 15-minute, because these days a 15-minute move is just the move is already done maybe. But on a 5-minute move, once you see like multiple stacking candles all in the same direction, with increasing volume, you could have taken this and, been like, oh, the 9 EMA, break of my 9 EMA is my, where I will stop. where I will get stopped out basically because my entry was my 9 or your entry was your 20, whatever you want to take it, right? Your entry was your 9 EMA if you wanted to take it over here or over here, whatever you liked it, right? You could have taken this and ridden it all the way up. You will have to be willing to lose this profit. That's the only way to know that, oh, this uptrend has now been broken. That's the only way. Does that make sense? Awesome. Yeah. So yes, that's the only way that I've been able to, consistently do this part. And at the end, it feels nice that you made, like, for example, if you went in from here to here and you made, for example, 200%, whatever, and over here you were 300% up. Yeah, you beat yourself up a little bit, but there's no way to tell where this would have gone up or this would have gone down. You have to follow your setup, right? You can't. Nobody catches the whole move all the time. Nobody does. Just really honestly saying, if somebody does, they are lucky. That's the only word that I can use to be really honest. Because we trade with lagging indicators, right? So you can't catch the bottom because this part is lagging, and you can't catch this because this part is lagging. So when you're trading with indicators, which are lagging indicators, you can't really time the top or the bottom. That's just the way it is. If you get lucky, you'll be able to join, get maybe close to the bottom, maybe close to the top, and maybe close to the top is usually because of the fact that you think that you've gotten enough. uh, Thank you, Joy Rider. So, yeah, so that is all. If you were disciplined and you go like, oh yeah, I made like this is too much. I made 400%, whatever over here, whatever. I'm out. If I lose some, I lose some, whatever. That's fine too. Um, if I lose some games, that's fine too. So you have to be willing to trade based on the data that's there. That's all. Sorry, guys, one second. Okay, sorry. Really nice price section right now. Any other questions, guys? It's a small class. Go for it, guys. Ask anything you want. This is the time to do it. Oh, um, that is I don't have a straightforward answer to it, Jim. And like there's it is something that you will settle down on a number, when you okay, let me put it this way. I think it depends on how much volatility you see, right? There are days where you can um there are days when you can do more. There are days that you can do less, right? There are days that the market is moving more. There are days that the market are moving less. If you, uh, Gerard, thank you for making fun of me. Um, there are days when the market moves more, and there are days that the market moves less, right? On a day where you see, for example, data came out in the morning, you wait for the market to open, you see that how the market is digesting. It shows you a clear trend that we're moving down, for example, right? So if you're heavy moving down, you hold your puts, you get it at a good time at whatever your levels were basically, and you move down. You can definitely aim for a little bit more that day, right? Because you know that everything is behind you, everything is aligning together, like data is aligning together, price action is aligning together. You can aim for if your regular brain says 20%, you can aim for example 25 or 30%, right? Because those are days that you have to capitalize on, right? That's the day the market is moving more, you timed it correctly, things are moving correctly. That's all. On days where the market is, I know, yeah, and there are days when the market does not move. Like today, for the most part, in the during the beginning part of the day, like if you see over here, like this was just chopping around and everything. Like this is not something that you should be trading regardless, right? And even when once it moved down, then it started chopping over here. Yes, you got a nice movement up and a nice move down, but if you miss these 30 minutes, the market really chopped for quite a while. So, in these cases, even if you said that, oh, rejected over here, rejected over here, rejected over here, I took a put over here, then yeah, 10% isn't a bad idea. So you have to adjust a little bit of your trading psychology with, how the market is doing it as well. You can definitely do more on days where, expect more when days are more. Um, but, there should be a 20%. Think about it this way. If you're doing 20% a day, maybe 15% or 20%, whatever you want to do, right? You can double your money, whatever you're trading with. Like if your each position size is, for example, you know, $500, for example, right? Or $100 even, right? If it's $100, you will be up to $200. Like you will double your trading size, or you will double your money basically in 5 days in that 1 week, right? And even if you maintain that $100 only, like that's all you go in with every day, right? If you win 60% of the time, I'm not saying you win 100% of the time, or even if you win 70% of the time, right? You will be up, if I'm not wrong, you will be up 200% every month. So, that's a lot of money when you think about it, starting from a small thing. Nobody gets rich really fast. Let's put it this way, till that doesn't drill down into your brain, um, it doesn't happen. And for reference, I'll tell you this. The most amount of millionaires that are made are not in the stock market, right? They're in everything else apart from the stock market. They are real estate, it is entrepreneurs, it is jobs, everything else. The percentage of people who become millionaires with trading is like a fraction of a fraction. So realize that nobody makes huge money on trading when they start out small. So don't aim for that. And people are who are making millions maybe also invest a lot of money into it, and they take like that 2, 3, 4% and call it a day and get lost. And that's the safe way of doing it. Unfortunately, for most of us retail traders, it takes a lot of um, losing money to do that. And a perfect example of that is when you started trading futures. Did you realize how many evals you went through, even though you were doing options, because you wanted to do big, hit it big, all of that stuff? And that's the psychology that, for example, all these prop firms capitalize on. That you will keep getting evals, keep getting evals, keep getting evals. Nobody wants to take it slow, do it slowly, and go ahead and go from there. So you cannot win just on that. It is just not possible to do that. So you'll realize once you take 20% every day, it will add up. At some point, you have to walk away from your computer, because if you keep seeing that, you'll just keep beating yourself up, and that's a more of a psychological beat on yourself than anything else. So don't do that. It'll take a while to get away, but it will. I promise you. You just have to be persistent at it, like anything in life. Um, for my levels, okay. So for my levels, I am not super. So these days, I'm not super particular about like how far I'll go back and how much I'll look. But generally, there are two or three things that tell you. I'm looking for, like, for example, if today I was looking at today, for example, right? So my so if I was looking at today's level, which I didn't, right? Like, which I didn't, I didn't look at the market today at all. But you have to look. I just look at where we repeatedly rejected. It doesn't matter whether it was today, it was yesterday, it was the day before that, even the last couple of days at least. We've moved so fast over so long, like over such a huge period, that it's just difficult to identify those things. So yes, the previous day is a really nice idea. The second thing that I want to look at is how much volume did it trade at. So, for example, if I'm looking at yesterday's level pre-market, that's one thing, because there's volume. But I'm also looking at this area, right, where it rejected, and we had this huge volume note over here getting rejected, right? So this is what I look for generally. That I'm not looking at this one as much because you look at the volume over here, but I'm looking at this one more because this is where like the real rejection happened. Like we came, like sellers came in really hard and pushed it down. This could have been just a push down and a push up maybe after that, but this is where we really, really rejected. So those are things that I look more for than just pre-market levels. Um, but that's just my way of doing it. Um, I just feel like that's where I hit a better note. Like those are places that gives me more confidence than looking just back at what happened. Like if you look at a 4 hour time frame and you just look back, oh, what happened over here? Oh my goodness, this is horrible. Nothing, Lovey. So yeah, so that's what I look for. I try to look for like the maximum amount of volume that I can get, and the maximum number of rejections I can find in that particular place. That is really most of what I do. Um, uh, so I'm pretty sure Joy, you can answer your question better than me. I do not think, especially for SPY, I do not think that I would still carry anything overnight. That's just me. For a very strong setup, I don't know, like if Netflix, for example, is that one exception that I can think of that if I had gotten into a call early, when we were talking about it on Thursday, or even before that, before Thursday, we were talking about it somewhere over here, like a week back or so. Like even if I was talking about it over here, like this one is something that I would have loved to hold, right? Because a lot of the things that we have talked about that affects a lot of stuff in the stock market does not apply to Netflix, especially tariffs, right? So things that are tariff proof, sure, you can definitely try and look at them. Netflix, among the big caps, this is the only thing that I would have wanted to hold over the last month, maybe or so. But otherwise, I wouldn't hold anything overnight. That's just my opinion. I think we have enough movement during the day to get your money, to be really honest. I think we're just being greedy to do that. Sorry, VWAP entries. Okay. Um, So VWAP entries on SPY especially, right? Like a lot of people love to do this, right? Um, there are two things that we do for entries. VWAP is the same thing as any other resistance level, right? It is what the fair price is with that volume, right? So the two things that I aim for, thank you. The two things that I aim for, give me 1 second, guys. Sorry. I miss you too. I'll be up in 1 minute, okay? I'll be up in like 10 minutes, okay? Huh? Food is already ready. You were having food, Mary John. Okay, I'll come up and feed the rest of you, okay? Go. You're full? Okay. You can stay over here if you want. That's okay, but I need to talk, okay? I can't talk to you too much. Thank you for this. I love it. Can I talk to her? Yeah, you can, but we can't. Okay? Hey, sorry guys. So VWAP, I treat VWAP the same way as I do a lot of my resistance levels. Not particularly my EMAs, but more my resistance levels. I look for, again, the same rejections and bounces. That's what I look at. I look at it that price comes over here, how it reacted over here at VWAP, for example. It came over here, tapped it, regressed back a little bit, sandwiched between my EMAs and this, and it just broke through it. And this is a good confirmation. Like if you didn't take a trade, like if you were skeptical about taking the trade all the way over here, you could have easily taken the trade once it broke VWAP over here because you thought that, hey, this price action is getting stuck over here. Or if you're looking for a re-entry, if you took this up all the way to the 60 MA, got scared over here, this is a nice place that it broke through with confidence, and you had a good push over here as well, right? You had a good push over here with decent volume, and you went up. So that's how I treat my VWAP. I don't treat it as anything really special. I just look for bounces and I look for rejections. Because generally, if there's a rejection at VWAP or bounce at VWAP, usually have good volume or crap volume, whichever one you want to say, depending on rejection or going up, and that can really help you decide how the market wants to go. So that's how I treat it as my entries. Does that make sense? Awesome. Did I answer everybody's questions? I think I think I went through the comments. I think I answered everybody's questions.
I think.
You want to go up?
Mm.
Oh, you're tired, huh?
Mm.
Any other questions? Or you go up, I'm coming. Give me 5 minutes, I'll be up, okay? Oh, careful, don't fall. Nope, no other questions? Everybody's doing great? Is it possible to know when buyers or sellers are going to be aggressive on VWAP? It blows for a quick scalp as it where it does that, but not what time 8 tips. No, man. I wish I could tell you. What I do look at is the preceding volume with it. You know, like for example, if you look over here, oh, this is almost impossible to see. Let's see if we can do this. This you can see it, right? Like this is what I would look for. That we came over here, rejecting, and this follow up with excellent volume is what would give me a little bit more confidence that this can go up. So I look at volume even on the SPY, like that's what I trade with. That's one of those things that has helped me realize where my what I can look for more reliably. So if you look at it, over here when it started rejecting at the 200 EMA, our volume was low, and once it came and tested VWAP over here and then broke through, our volume went significantly higher over here. So that has always helped me more with my trading. The volume part of it has helped me more with my trading than almost anything else. I know Joyrider has a back office technique that he uses. The footprint, yeah. So that's what I said. So the only way to do it is looking at the back office, which is actually looking at the footprint chart, and realizing, whether there are more buyers or more sellers, and how they reacted at that on that candle, and how they went about it. So that's the only other way that I know of, but I'm not fluent with it, or not even close to fluent with it. I just know that's one of the way of looking at it. But Joyrider, has we've done this class on footprint charts and bookmap, and I think there should be a recording on that should be there so you can take a look at it. Yep, no worries. Order flow distribution. Oh, so if it's under a certain amount of volume, no, I don't. I wish I had the complexity to analyze that, but I do not. Just because you will see generally that, I mean, you can definitely take a look at it, but generally lacking volume, you're going to see it across the board generally. If you look at, like, if SPY's volume is low, like for example on Friday, SPY volume was significantly lower, you would have noticed that generally throughout most of it, except for Tesla. Now, the way to do it is probably the opposite of what you're saying. What I would look at is if something had unusual volume, right? That's what we trade penny stocks on, and that is why Tesla was such a great trade for Friday, like it completely sucked. It felt like to me that it sucked out all the volume from it. So rather than focusing on what does not have the volume, I would focus at what does have the volume, right? And then just go for those things because you'll realize that price is moving aggressively on it. Whether Tesla is sucking up the volume because they had bad earnings and they are dumping out absolutely, or it is absolutely pumping up. So I look at it the other way around, which is funny enough now that I realize it. Now that you asked me that question, I kind of realize it. I just look at the stuff that actually gets the volume more than anything else, and that's kind of my thinking that comes from penny stocks. Because once something gets the volume, it moves really nicely, and that's the good part of it. Oh yeah, so I use this. So I use just a scanner over here. Um, I just use this over here. The Weebles, like, if you look at top gainers after hours, it will start showing you, the minute it turns 4 o'clock, this changes to after hours, and then you'll start seeing stuff pop up. You can never catch the first big pump, like the first like minute of, or whatever, 30 seconds that you have, because even the bot has a certain criteria that it needs an X amount of volume to actually throw it to us. It's configured in a certain way. So, we never catch the first part of it, right? Like, for example, for TVGN, um, I did not get in over here or even over here. I got in like at 1.17, and that is with looking at this. I don't know how, but I was looking at it for some weird reason, and I saw it just spike up, like literally just started going up, 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 and I don't even know what the news was, but it went from 0.942 to over here to $1 or like 1.1, and it showed like really nice volume compared to what it was before. So I put an order in, bought it, went back, took a look at what the news was because that's when I saw the scanner pop up, and I realized that it could go up. Now, the good part of it was that this was already charted out for me. I had already multiple days, like months back of trading this. I had it charted out. So once it broke through multiple levels, and even if there wasn't anything else, just breaking that psychological $1 level with a really good push is generally a good sign that it will give you some movement. It might move from, whatever, if you bought at 1.03, it might top out at 1.1, which is, 7% return, which in a minute, if you get a 7% return, I am really happy with it. So that is all I use. I use the bot and I use just Weeble's own, um, chart over here. Um, and yeah, that's all I look for. Only two things. Anything that has volume, that is all I would trade. I don't short. Unfortunately, I wish I would go to IBKR and be less lazy, and be smarter to learn a new platform. If I do that, I would be able to short a lot of more stuff compared to what's available on Vivo, or Robinhood. Robinhood doesn't have any shorting. But I have been very lazy about that, and that is primarily I blame Moin for it because he introduced me to futures, and that kind of fills my appetite for trading now. Hmm. Yeah, appetite for trading and for losing money as well, both of them, really fast. Um,
Real telling.
hmm, yeah, it's pushing, pushed nicely. Okay, right at closing, literally last minute. Last 5 minutes, it pushed up from 1.5 to 1.634. Okay, yeah, decent push up. Okay. Oh, they're coming down. Hmm. Oh, wow. Look at that push. Jesus. Ooh. Okay. Yeah, not the best setup. Okay. Okay. Yeah, TVGN is for tomorrow. Like, that's what I'm looking at. That'd be a nice thing tomorrow morning if you can wake up early.
Order filled.
Do I keep over when the market conditions are better? Yes, I would. I would absolutely do that. I would do low risk stuff that you can move really nicely. Like the bigger names you can trade, even SPY you can trade. You could get longer, like a month out if you have the money for it. 10 days out, 14 days out, if you're aiming for 20, 30%, you could get a very safe 20, 30% with those tickers easily. So, I would not, I definitely have done that multiple times with multiple tickers, especially the Mag 7. You can definitely do that. I don't think there's any harm in doing that, like, clearing stuff overnight. Do I have a screener for that? No, I just use the chart. I literally just use the chart for doing it to see how good it is or how good it looks, and that is all.
Order filled.
Uh, so yeah, like and you'll see the charts, right? We'll go over it. Like I think even on Wednesday class, we can look at this right now, right? Like if you look at, for example, Amazon, right? If you look at Amazon's daily chart, when we were not in this, when you were looking at this part of the chart, like if you forget this part of the chart out, like which has been from January or beginning of February, if you look at this all the way from over here from August all the way till over here, and this was like a pretty sudden drop, right? Even before this was hugely moving up. There's no harm in, it retested the 60 MA, 60 MA, close to the 60 MA. These were all good entry points, right? That you could have aimed for. Charts will show you like the story that's there, like Amazon was on a beautiful run, like, and for most of them, like most of these, well, you can pull up Google chart, it will probably look the same. Netflix, whatever you like, any of the FANG stocks you can pull up and it will probably look the same, right? So you have to, like, the chart will tell you a good story of how it is, if you keep on following the earnings, their guidance, how, and you don't even have to play the earnings or the guidance, right? What I look for is, for example, what did Amazon say, how the market reacted to it over the next day, and how the market reacted over it over the next 2 or 3 days after that. And the simple reason is that, there's a lot of retail that trades with it and everything. So, you could do great on an overnight trade. Like, for example, it was pumping up, it pumped up really nicely, and then it dumps, for example, over the next 2 or 3 days because of, XYZ that was whatever in the report that, the market didn't like particularly. So you have to be mindful of those things. I just watch those things, especially for the Max 7, and I just let it be. I'm like, I'm not the savviest of traders to hold stuff, through earnings and predict stuff and all of that stuff. But, I would, when I do options, I do these moves, I would, like, for example, buy one when it was testing the 9 EMA over here, the price over here, I would just buy it over here. And there's a good reason for it. If it breaks this, for example, a 9 EMA, I will cut this out, for example, at 182 or 181 or somewhere of that sort, 181, right? Like I would cut this from 185 to 182, for example. It's a $3 move down, you lose 20%, whatever, right? But it's a low risk and a high reward situation, right? You could do it at 185 and then, go all the way up to 200, for example. You said, yeah, I would want to go to 199, for example, right? Not you're not aiming for the absolute top. You said that, oh, this is moving up really nicely. I'll aim for 200, for example, whatever. Like that's the wildest thing that you wanted to do. You could absolutely aim for that, right? But the risk to reward is significantly different. I keep on saying this, right? I like generally taking trades which have a low risk, which I can cut out really fast. Like if it lets go of this point for an X point, I can cut it out with like a 10% loss or 12% loss. But the upside is just so much higher that I have to lose, like, for example, if I cut it out at 10%, and this would have been, for example, a 100% move on your option, I have to lose 10 times a setup like this 10 times before I, lose 1x of my, trading portfolio. And more than likely than not, you'll realize that, when you're doing good, high quality setups, you'll lose maybe once or twice or maybe 3 times, but you'll win 7 times as well. So, even if you're aiming for 20, 30% on a profit side and a 10% loss on the loss side, you'll still come out way ahead overall. That's just my way of doing it, and that's after losing a lot of money in options. I've just, it just been burned too many times to not follow my own rules. That is all. And if you have the capital, the second thing is if you have the capital to get multiple contracts, then yeah, then you can leave the last one after you've made your money back and a little bit more. You can leave the last one and let it run, absolutely wild. That's perfectly fine because that's just house money, right? Um, I just feel really bad when I have, like, for example, if I'm up 50% on a position and that's house money, and it comes down to 15% and then my stop loss hits me. I just feel really bad. I'd rather take that 50% and be like, I am happy with this and look for a re-entry. Then I'll constantly, that helps me look at the chart again and again as well. So that just helps me with my re-entry. That's just how I do it. And everybody's different. Like there's no, as long as you're making money, that is the right way of doing it. The only judge of whether what's the right way of doing this over here in the stock market is, you are consistently, persistently making a similar amount of money on the same repeated setup that you have developed for yourself. Ooh. I don't do iron condors. I know Smooth does it. We can definitely discuss that on tomorrow's live if you are able to join in. We'll do it at 10 o'clock. I think Moin would be there as well. I am not a huge options person. Like I don't like do all sides of it and everything. I'll do calls and puts a little more out on the out of the money, a little bit longer term and everything. I'm trying to experiment with other things, but I'm not the person that, would be able to answer it. That's all. I know the volatility is huge and you could, sometimes think about getting a top and a bottom, both sides and everything. Um, but unless it plays out really well to both sides, it is just, or one side really, really well compared to the other, it's just difficult to it. I just always feel like, you have to time it really well. Um, so I've never been successful in doing it. I think, but I've only tried it once or twice. So I'm definitely not the right person to answer that question. But I know Smooth does it and he does it really well. So he'll be able to answer that tomorrow, I think, if that's okay. And the only thing that I wanted to show you guys is this. Let me show you the part about repeatedly saying stuff, right? We'll do this entire screen. We'll do this. And so I'm trading futures with you guys. Like while I was talking to you, I'm trying to at least do it. And this is what I keep doing, right? Like I will trade like the same thing, like rejections of EMAs, rejections of stuff. I will just keep doing this, and you'll realize generally that it plays out okay once you start doing it. So I mean, people would say that there's no sense of doing it over here because we were bouncing off the 60 EMA. We came over here, but we've consistently noted that as this happens, the 20 EMA is important because it was bouncing over the 20 EMA here, 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 then broke over here and then broke down. So there's a method to the madness, the way you do it, and as long as you're able to consistently make money off of it, you'll be fine. That's all. I hope that makes sense. Alrighty, guys. If we have no more questions, then I think we will hang up for today. Is that okay?